US tech giants have really claimed supremacy in the AI race. DeepSeek is really making them question that narrative.
The release of DeepSeek AI from a Chinese company should be a wake-up call.
DeepSeek revealed that it was able to outperform the leading US AI companies at only a fraction of the cost.
DeepSeek shaking up global tech.
NVIDIA losing nearly $600 billion in market cap today alone.
In a world increasingly shaped by technology, we find ourselves at the crossroads of a new kind of rivalry.
Shares in the advanced computer chip
It was one of the worst.
If the Chinese company has billion-dollar investment by global centers, then AI is
DeepSeek.
One that echoes the intensity of the Cold War, but with a modern twist. It's no longer about nuclear arms, but artificial intelligence. The United States and China, two superpowers at the helm of global influence, are locked in an escalating battle for AI supremacy. The stakes are far-reaching, affecting not only the tech world, but also the global economy, politics, and even culture. Recently, China made a bold move that has sent shockwaves through the entire tech landscape. It unveiled its advanced AI model, DeepSeek, an announcement that reverberated across the world, sparking a dramatic $2 trillion plunge in the stock market. The reasons behind this market shock are multifaceted, but at their core lies the fear of disruption. Investors are grappling with the realization that DeepSeek, if it lives up to its promises, could outstrip current technologies, particularly those developed by American companies. With DeepSeek's potential to outperform existing AI models in critical areas, such as natural language processing, machine learning, and automation, industries spanning cloud computing, data analytics, cybersecurity, and even consumer electronics could be profoundly affected. For companies that have spent years building AI-driven services, the specter of obsolescence looms large. The key to this disruption lies in DeepSeek's potential to surpass current AI standards in applications like search engines, recommendation systems, and enterprise solutions. If it proves more advanced and more cost-effective than American AI models, it could cause businesses to shift away from well-established names like Google, Microsoft, and Amazon, threatening Silicon Valley's dominance. The mere possibility of such a shift prompted investors to offload shares in companies perceived as vulnerable to this technological leap. The implications of DeepSeek's rise extend beyond business concerns. For years, the United States has prided itself on being the global leader in AI innovation, with giants like Google and OpenAI at the forefront. But China's swift advancement with DeepSeek challenges this long-held belief. This shift is stirring anxiety among investors, who are now recalibrating their portfolios in light of China's growing influence in the tech space. Geopolitically, the implications are equally significant. Despite the U.S. government's stringent sanctions aimed at limiting China's access to advanced semiconductor technology, DeepSeek's success suggests China is finding ways to bypass these barriers. This has raised the specter of even tighter restrictions from the U.S., potentially escalating trade conflicts that could disrupt global supply chains. Moreover, the opaque nature of DeepSeek's technology only deepens the uncertainty. While Chinese authorities herald the model as a game-changer, details about its architecture, training data, and real-world applications remain scarce. This ambiguity leaves analysts struggling to assess whether DeepSeek is truly as revolutionary as its promoters claim, or if the hype is overstated. But in the world of high-stakes technology and investment, the mere perception of a disruptive shift can be enough to send tremors through the market. As these developments unfold, the competition between the US and China in AI has come to resemble a new Cold War, albeit one where the battlefield is not the nuclear arsenal, but the digital frontier. The US has long been the dominant force in AI, thanks to companies like Google, Microsoft, and OpenAI. But China's rapid progress, embodied by DeepSeek, is closing the gap. Both nations are funneling billions into AI research, hoping to achieve a decisive edge that will shape the future of global technology. But unlike the Cold War, where the military might be the ultimate prize, today's race is about economic and technological leadership, with both sides aiming for dominance in the rapidly growing field of artificial intelligence. The immediate impact of DeepSeek's announcement was felt sharply in the U.S. stock market. On the day news broke of DeepSeek's groundbreaking AI model, R1, the tech-heavy Nasdaq took a nosedive, plummeting by 3.1%. The broader S&P 500 also saw a 1.5% decline. At first glance, it seemed like a panic sell-off, fueled by uncertainty about what DeepSeek's emergence meant for the future of American tech. The damage was especially pronounced for NVIDIA, the world's leading supplier of AI chips, which saw its market value evaporate by nearly $600 billion, the largest single-day loss in stock market history. The loss was staggering, with NVIDIA bearing the brunt of the sell-off, losing almost 17% of its value in a single day. The magnitude of this loss is hard to fathom. NVIDIA's market value drop was greater than the entire worth of all but 13 companies globally. The massive drop in stock prices underscored the deep unease within the market about the implications of DeepSeek's breakthrough. But it wasn't just the potential of the technology that caused the plunge. It was the fear that U.S. companies may have overspent in their pursuit of AI innovation without a clear path to profitability. As U.S. tech giants continue to pour vast sums into the development of artificial intelligence, there are increasing concerns that this aggressive investment strategy may not be sustainable in the long term. The sheer scale of financial commitments is staggering. For instance, Meta recently revealed plans to invest over $65 billion in AI research and infrastructure within a single year. This is part of a broader trend where companies like Google, Microsoft, and Amazon have made substantial investments in AI as a means of securing their place in the rapidly growing tech landscape. At the same time, OpenAI's CEO, Sam Altman, has suggested that the AI industry could eventually require trillions of dollars in investments to meet the global demand for increasingly sophisticated AI chips and systems. The cost of innovation in this space is rising exponentially, with no clear guarantee of immediate returns. However, the advent of DeepSeek, with its bold claims of achieving comparable AI performance at a fraction of the cost, is throwing these massive financial commitments into sharp relief. If DeepSeek's technology delivers on its promises, it could disrupt the very foundation of how the AI industry operates, challenging the enormous financial bets made by U.S. companies. Investors are beginning to question whether these massive investments are justified, or if the American tech giants are overspending in a race to develop cutting-edge AI without considering the long-term sustainability of their strategies. The promise of cheaper, more efficient AI solutions from DeepSeek has the potential to reshape the financial landscape. If DeepSeek's claims about cost efficiency prove to be true, companies that have poured billions into building massive AI infrastructures could find themselves at a disadvantage, having invested in expensive, resource-hungry models that are now being overshadowed by more affordable alternatives. This raises serious questions for investors and stakeholders who are starting to reevaluate whether the current path of escalating spending on AI is the best strategy, or if there are smarter, more cost-effective ways to achieve similar breakthroughs. In light of these concerns, the future of AI development may be headed for a paradigm shift, where the most successful companies are those that can innovate not just technologically, but also economically. The growing debate over the sustainability of these investments could force U.S. tech firms to rethink their approach, potentially leading to more cautious, targeted spending on AI in order to ensure long-term viability in a highly competitive market. Beyond the immediate financial fallout, the emergence of DeepSeek has sparked a wave of geopolitical anxiety, underscoring the broader implications for global power dynamics. For years, the United States has attempted to curb China's ascent in the realm of artificial intelligence by imposing strict controls on the export of critical technologies, particularly advanced semiconductors, which are essential for building powerful AI systems. These measures were designed to stymie China's ability to develop cutting-edge technologies and prevent it from gaining a competitive advantage in AI. However, the unveiling of DeepSeek and its remarkable AI model signals that China may have found ways to circumvent these restrictions, potentially signaling a shift in the global tech landscape. With DeepSeek's breakthrough, China is now positioned to challenge the U.S.'s long-standing dominance in AI innovation. raising concerns that the U.S. may soon be facing a formidable rival in the race for AI supremacy. The implications of this shift go beyond just market competition. They touch on national security, economic power, and technological leadership. As China pushes the boundaries of AI research and development, the U.S. may respond by tightening its own regulatory framework, perhaps introducing even more stringent sanctions on Chinese tech companies or restricting access to critical resources like high-end semiconductor chips. This could escalate the tension between the two superpowers, leading to a deeper, more complex tech Cold War. Such a scenario would not only increase market volatility as investors grapple with the uncertainties surrounding the future of global AI dominance, but also reshape the global balance of power and technology. Countries and corporations around the world would be forced to reassess their strategies, as the rivalry between the US and China in AI could redefine economic and technological alliances for decades to come. This geopolitical rivalry, fueled by advancements in AI, could potentially set the stage for new trade wars, technological blockades, and a reshuffling of global influence. However, amidst the chaos, some experts urge caution in reading too much into DeepSeek's rise. While the model's capabilities are impressive, one breakthrough does not necessarily signal the end of American AI leadership. The full potential of DeepSeek's R1 model remains unproven, and it's still unclear whether it can meet the demanding needs of large-scale industrial applications. There's also the question of whether its cost-effectiveness claims hold up under scrutiny. If DeepSeek's performance is ultimately overstated, the panic in the markets could be revealed as an overreaction, driven by the fear of change rather than the certainty of disruption. As time passes, we will likely discover whether DeepSeek represents a true turning point in the AI race, or if the industry's current volatility is simply a product of uncertainty. But one thing is clear: the competition between the US and China for dominance in AI is far from over, and the coming years will likely shape the technological and economic future of the world. Thanks for watching. Like, comment, and subscribe. We'd love to hear your thoughts.